Hey everyone, we'll get started here in a couple minutes. Do you guys get logged in? Let me know if you can see my screen and hear me talking. And if you have any questions, feel free to chat those in and we'll get to them at some point during the session. All right, just another minute, we'll get started. All right, welcome everyone to the Proving Ground Mastermind. My name is Hiram. As always, I'll be your host for today, so let's go ahead and get started. As always, if you guys have questions, go ahead and chat those in. Let me know if you can see my screen, hear me talking. Just say hello. Let me know you're out there, and we'll go ahead and get going here. As always, like, share, and follow on social media. Here are links to social media if you guys want to follow us using those. And let's go ahead and get into this thing. So today we're going to talk about half top and thick orange flat in general, but I kind of want to go over flat top or half top rather, that way those of you guys that are not familiar with half top, you can be familiar with it. And then also look at what that nuance is. What is it that when the thick orange goes flat, what it's telling us. And so I'll point some things out today. And again, when we create any kind of pattern around something, we want to make sure that it's something that is duplicatable. So we're very specific as to what the parameters are. For example, flat top is, flat on top or bottom with specific values on the thick orange line, and major minor being either overbought when it's flat on top or oversold when it's flat on bottom. Where half top is just when the thick orange line is at 50 and flat. And so we're going to look at some examples of that here. Let me go here. Okay. So a good way to determine half tops or flat tops is basically when they're flat and the value prior to the current flat is the same. That's what makes it truly flat. So for example, right now, this is at a value of 50, right? In this example, this is at a value of 50. If I go back one candle, that is also at a value of 50, right? Or 5 if when you're looking at green chart 2. So this is a value of 5. The thick orange line is at a value of 5 or 50. It's pointed down right now. And then it goes to the next candle, and at the end of the next candle, it too is at the same value, which makes it flat. Sometimes it may appear flat and not actually be flat because the previous value was different. So if you ever want to verify or validate whether or not that is actually flat, you just go back to the previous candle, see what the value was at that point, and if the value is the same on the current candle. Oh, no problem at all, Karen. We just got started, so you're just in time. So again, we know that it's a half top because it's flat and a value of 50. Okay, And when it's flat and a value of 50, if this is a green candle, then we're expecting some red movement, some movement back in the opposite direction. How much is going to be based on your back testing, obviously. But that's what the expectation would be. So the question that I like to address is why? Why is it that when that line, what is that telling us? When that line goes flat at 50, and why is it pulling back? Well, it's showing us that there's some type of barrier there. There's some type, or getting close to a barrier, right? And those barriers are obviously support and resistance, okay? And if we have a whole bunch of traders around the world that are looking at these things, support and resistance, and they know that they're not going to want to buy as they get to resistance, right? Resistance is above us. They're not going to want to continue to buy. Then they're either going to release trades if they're in trades, or they're going to start to try to sell, right? Now, we don't follow these same rules, obviously, because a lot of times those lines are made to be broken. There is not a support or resistance line that I've ever found that hasn't been broken in one direction or the other, right? It may be working as resistance right now, and then later it could be working as support, but at some point it gets broken, right? So our indicators a lot of times are telling us, okay, we've reached a level, and now we're starting to see that traders are becoming much more reluctant at that level, or as it nears that level. And so as it gets to or nears that level, then we get the indication, right? Okay, yes, that looks like it might hold a little bit. Now, does that mean that the market is just going to bounce and start reversing? No, and it doesn't always mean that it's going to hold either. We don't win every single trade, but it's consistent enough that we can use it in our trading and determine that it's time to look for a opposite direction opportunity. Or if we're continuing to buy because we have good indication to continue to buy, then we're looking for a way to wait for that pullback before we enter the trade. But for today's scenario, we're just going to look at it as is. For pattern's sake, duplicatable, that means that it is flat with a value of 5 if you're looking at green chart 2. And we have a green candle, therefore we are looking for an opposite direction candle on the next candle. We want to see some sell or some short movement, right? Okay, so that's essentially what we're looking for. Now, if this was a red candle, then we'd be looking for some buy. And if it's a small candle, like a doji, if you guys know what a doji is, I'll show you. You ever see candles that look like this? Just a line with a wick and shadow. Looks like a cross. Obviously, these can also be red. A line with a wick and shadow, right? Those are dojis, right? It ended about the same place it started. Right about. Within micro pips, it makes it red if the micro pip is lower than where it started, and green if the micro pip is higher than where it started. With these being the exception, I would stay out of those for half top. I would just stay away from those. So you want to have some type of body associated with that particular pattern, right? So you don't want to have a doji. You don't want to have a small cross type candle where it ended kind of the same place it started. Okay, so let's look at our first example here. Now again, to verify that this is actually a half top, right, a value of 5, or in this case 50, and the line is flat, right, and there's a green candle, we can go back one candle right there. And what is the value? The value should be the exact same. And here the value is the exact same. And it's not flat yet, right? So it's pointed down, but it's hitting some level, in this case, of support or resistance. Actually, in this case, resistance, right? Because it came back up and the value remained the same. It's at 50, right? So we're on some type of level of resistance. And so that gives us credence to go ahead and look for a sell or a short opportunity, right? Okay, so right here we would be looking for a down move. There you go, that one moved on the first candle, 10.8 pips. It did go up about 6 micro pips, but that's, insignificant. depending on your stop loss and take profit, but even then, 6 micropips is insignificant. So 10.8 down on that one. Good. Let's look at this next one. Again, we've got that flat, and the value is negative, in this case, negative 50, right? So again, if we go back, we can see that right there as well, it was also negative 50 and flat, right? Now, the only reason we're not using this one as the example is because we had a gap right here, right? So the market closed and then reopened with a gap. Matter of fact, this probably isn't a good one to use at all, just because this is the first candle of the opening of the Sunday open. I didn't realize that. Thought maybe it was just a 5 o'clock Eastern sweep. But yeah, but it still serves a purpose in terms of looking at it as it looks. But to be clear, I probably wouldn't have taken something like this if it was based on the market open. But just looking at it as an example, we can see that the line is flat, and it was at the same value as it currently is, which makes it flat, and the value has to be that value of 5 or 50, right? In this case, 50. So right here, because we have a red candle, right, then on the next candle, we're looking for some pull up, for some long movement, okay? So click forward, and good. Moved up. 11.5. Again, we're not going to really use that one as an example, but it did show us our what it should look like. Okay. So right here we've got another, and same thing, right? We've got a big green candle, and the value is negative 50, and the line is flat. So again, if we had this, we could go back and verify, yes, in fact, the previous value on that thick orange line at the post at the end of that candle is the same. It's at negative 50. And so on the current candle, the candle in question, again, we have that flat, negative 50. And so we're hitting some type of resistance, right? And as a result, we're looking to get some of that pullback, some of that movement back in the opposite direction, right? And we do get some up movement, right, on that one, 2.9, and then 3.5 down, and, depending on how much we're, looking for in profit and stop loss, that would determine whether or not that would be enough, or if you needed to take more, or whatever the case may be, right? But here's something that's really interesting, is that in this particular scenario, as is with some of these other scenarios, we can see that we had, like, for example, here, we can see that we had some things maybe giving us some credence to the long or buy side, right? We've got green just crossed on top of red. We got major, minor pointed up. So this is kind of creating that dirty pressure scenario right here, right? And sometimes when we get some of these conflicting setups, I know some of you guys, if you've back tested them, you'll take both of them and you have really good success with that, which is great. You definitely should do that. There's nothing wrong with that, right? If we had, let's just say, a 1-to-1 on either side wouldn't work, but let's say we had a 2-to-1, right? So we had a 5-pip take profit for the dirty pressure and a 5-pip take profit for the half top and a 10-pip stop loss for the dirty pressure, and then a 10-pip stop loss for the half top. You could very well get both of those trades, right? It could come down, take profit, and then go back up and take profit and never go enough to hit your stop losses, right? So just some food for thought there. Now, if you are trading, a scenario like that, you're going to lose half of, if you lose one of those trades, you only lose half of what you normally would lose. So you're taking 2 trades, right? But they're in opposite directions, which actually creates a hedge scenario. So where in one instance, if you took a buy trade, and I'm telling you this because I don't want you guys to be afraid of doing this kind of stuff. Matter of fact, I would encourage you to do it at the highest lot size allotted for, whatever trade has a higher risk percentage. So let's say one of those trades has a 1% risk percentage, and then the other trade has a 2% risk percentage. I would recommend putting in an equal trade, 2% on both of those. That would be 4% total. Okay? Because watch, if I take a 5 pip take profit, right? Let's say I have a 10 pip stop loss and a 5 pip take profit. Okay? And that's times 2. So I'm taking a buy trade for 5 pips and a sell trade for 5 pips, and both of them have a 10 pip stop loss. Okay? If I win one, then I make 5. Right? And if I lose the other, then I lose 10, right? I lose the other, so -1, 10, right? Okay. So if I would have only taken one and I took the loser, then I lose 10. Or if I took both and I hit one, you're going to win one of them. You could win both of them or win one and lose one, okay? But in either scenario, it's more valuable for you to take both of them. If you have your backtest data for them, it's more valuable for you to take both of them. Now, you don't want to make this your rule, right? And just say, well, I'm just going to take both directions, because it doesn't work that way, right? I'm going to take a 5 pip stop loss or 10 pip stop loss, 5 pip take profit on every single one of my trades in both directions, right? Because that's not wise, because you could very well have just won the trade that you were taking, and instead of trying to hedge your loss there. It just doesn't make any sense, right? So don't try, that's not going to work long term. But if you have 2 trades that you've back tested, then in that scenario you can call an audible and put in an equal trade in both directions. This actually creates a hedge position. So your free margin is not even at play. For most brokers, your free margin wouldn't even be at risk until one of those trades closed with either won or loss, right? So because you have a trade going in both directions, as one of them increases by a certain amount, the other one decreases. So it's a wash, right? Now, if I win one of those trades, I win 5. And then I lose the other, I lose 10 on that trade. So overall, I lost 10, right? And I won 5. So my total loss in that scenario would be 5. I still would have lost, right? I still would have lost 5. Okay? Now, if I just took one of them and I lost it, then I would have -10, right? I would have lost 10. Okay? But this scenario, if I win both of them, right, then I win 10, right? So basically my risk is I can win 10 or lose 5. Otherwise, it's I lose 10 or I win 5. See what I'm saying? So 10 is still at risk, but if you win one, you're going to win at least one of them. Guaranteed, you're going to win one of those trades. Guaranteed. You're going to win one of those trades, right? So if you win one, then and you lose the other, well, you've just cut your loss in half. But you also have the option of winning both, which means you double your profit, right? So it's a win-win scenario to take both of those in that situation. There shouldn't be any fear associated with it. If you have 2 setups that you've backtested and they occur at the same time, it's more advantageous to take both of them. It actually decreases your risk, okay? If you guys have questions about that, go ahead and chat that in. Hopefully that's clear, that it would be more advantageous to take both trades. Very few times in our lives do we have the option of mitigating our risk by in day trading, especially by putting in more trades, right? This is one of those scenarios. Of course, it's only something you back tested. You don't want to try to create a trade plan out of that. Believe me, I've tried it, right? Put in a buy and a sell, and believe me, it just doesn't. It's just not the way to do it. It's not a winning game to try to do that, right? Because as one decreases in profitability, the other one increases, so on and so forth. So you're really just playing a break-even game. It makes absolutely no sense, especially when you consider commissions and swaps and things like that. You could very well be risking winning trades that would have just won and nothing else, and you don't get to have that because you won that trade, but you're negative in the other trade. So that makes absolutely no sense. Don't do that, right? But again, in scenarios where you have two setups that you've back tested, you could play those out equally and mitigate your risk. You could decrease your risk in that situation. Okay, so right here, let's just say that that was the case. Just because we're talking about it, let's use it as an example. Let's just say we're looking for a 5 pip take profit on the dirty pressure. So 118.463. So that's going to go 118.513. Right there. That's well, I'm going to make that line blue. And then we want 5 pips down, 118.463, so 118.413, right? 413. Come on. Right there. And we'll make that blue. So we want to touch those blue lines before we touch either of these red lines, 118.563. We don't want to get there, and we don't want to get 363 there. So it is possible to go up to that blue line, down to that blue line, and not go far enough to hit that red line or that red line. And it is also possible to just go down in one direction or go up in one direction. So we know that for sure, absolutely certain, you are going to win one of these trades, guaranteed. Guaranteed, which is also something that is hard to say in day trading. Guaranteed one of these trades is going to win. Guaranteed. It's not guaranteed, by the way, think about this in terms of risk, it is not guaranteed that one of these trades is going to lose. And it is impossible for both of them to lose because they're equal, right? You have to go, there's no way to go 10 pips in both directions without going 5 pips in favor of one of them, right? So it is absolutely guaranteed that one of these trades will win, but it is not guaranteed that they'll both win. There is a possibility that they'll both win, right? But what is impossible is that they will both lose, and you still have the possibility of both of them winning. So you've got more in your favor by saying it's guaranteed one of them will win and possible that two of them will win, versus the other, which is it is guaranteed or it is not guaranteed that both of them will lose. It's impossible that both of them will lose, right? Okay, so let's go forward and see how that would have played out. Okay, right there, right? Very next candle. Won that one, lost the other one. So we mitigated our loss if we had two setups occurring at the same time, right? Okay. So, and by the way, if you were at a 2-to-1, let's just say your dirty pressure was at 2-to-1, but your dirty pressure was like a 15, and 7.5, or let's just say 16 and 8, 16 and 8, right? And you're risking 2% on both of them, then 16 pips is going to equal, 2%, right? Of your account balance, and so is the other one. So you could still very well have won that, right? As long as your stop loss is not below the take profit for the other trade, right? And in that case, it would have been 16, so it would have been even further out, right? And take profit is 8, which is still below the stop loss of the previous trade. So that means you could still very well have gone up and down and still stayed within those parameters. So just keep that in mind. Okay, so that's not the lesson that we're talking about today, but I did want to emphasize that because those are situations that we run into quite often, and I want you guys to understand that that is actually a very advantageous situation to be in. Okay, so what we're looking at is half top, flat, 50. We're expecting sell or some down movement. Again, if we had dirty pressure, then we could say to ourselves, okay, well, we focus on dirty pressure, but this half top could very well pull back. So that could give us some cause to pause, right? And say, well, let's look at that first. Is there anything in the 5 minute that indicates that might go down first? If that's the case, then I probably want to maybe wait for it to go down and then get in on it as after it's down, right? So wait for 5 minutes to be oversold or something, right? So that is one way of looking at it. Now, I don't want you just to do that. I want you to test that to see if in those scenarios that could have been advantageous for you, right? So just keep that in mind. Okay. So in this particular case, if we're just looking for the half top and disregarding the dirty pressure altogether, then we would be looking for a sell or a short move, right? And we know that we got it. It did move short. Now, depending on what your stop loss and take profit are, would determine if this would have won, right? Okay. We already looked at that example. We were here on this example, and this one went both directions initially, right? Up a little bit, 2.9, 3.5 down, and then some more follow through right there on the next candle. Okay. All right, let's look at this one. And here again, by the way, look, this is major minor are up, not even overbought yet, partially overbought. Green is up, red is up. There's some divergence, so that's, you know, some that gives more credence to sideways motion than it does up motion. And then our half top, right? So there are some things here saying that there's still possibly some up movement, right? And it's just that small thing in the thick orange is telling us there's a barrier there. So keep an eye out for that because you might get some pullback. And sure enough, we did. Did we get some long movement? Yeah. But more significantly, we got short movement, right? Okay, let's look at this example right here. Again, go back. Value is the same for thick orange here, even though it's pointed up. Doesn't matter which direction it's pointed, right? As it is here. Value is the same, 50, okay? Now, right here, major minor pointed down, pressure's down, green is on top, so that gives credence to the long side, right? And we've got this half top. So we're expecting that we probably hit some level, some barrier here that could cause for traders to start going long, right? And we could pick up on some of that movement long. So we'd be looking for a buy or a long trade. And right there, that moves about 21.3 pips, maybe 1 micro pip of drawdown. Good. All right, let's look at this other example right here. So again, go back. Thick orange, yeah, perfect. It's down, so we know the value is 50. And it doesn't have to be down, it doesn't have to be up. It could even be flat, right? Maybe you got 2 half tops in a row, right? But as long as the previous indication before the flat, before any flat, as long as the value is the same, then you know that the line that you're looking at that may just look flat is in fact flat because it's equal to the previous value. The value is equal. Sorry, the previous value is equal to the current value, which is -50 or -5, right? And that's why it's flat, because it didn't move any further down and it didn't move any further up. So it's creating this barrier. And that barrier is telling us there's some type of resistance in this case, because this is a green candle. There's some type of resistance above us. And again, when there's resistance, millions of traders around the world are inclined to short, right? So let's click forward. And it looks like it moves both directions again here. That moved up 2.7, that moved down 2.3. So nothing significant quite yet. Let's click forward to see if we see anything. Yeah, here we go. So that moved down 8.3, and that's huge. That was probably an announcement or something. Look at how small these candles are. Look at how huge that one is, right? So this is not, this was probably something emotional. That wasn't likely a result of just regular market conditions, right? Okay. So I want to show you guys something else, though, with this in mind, right? Keep this whole concept of the thick orange going flat and why it goes flat, right? And I want to show you guys something. So I'm going to pull up that one and that one. Get rid of that one. Okay. Check this out. So I just went in and drew in some support and resistance lines, okay? They're really basic, simple support resistance lines. I don't want you guys to over-obsess about these support and resistance lines, okay? If you want, you could go back and look for some of these flats and see if they coincide with where the market has come up and bounced or come down and bounced, you know, so on and so forth, right? Okay. And draw the lines if you want, but I wouldn't recommend trying to master drawing lines without some type of indication as to where that line should be. And let me show you why. Anything, without any validation or anything, anything can appear to be a support and resistance line. Okay, so I'm just going to draw a random line right here, just right there, just random, clean chart. If I go back far enough, look, right there, boom, right there, boom, right there, look at that, boom. Okay, I'll draw. I just want to make the point here. Look, I just drew two other random lines. Let me erase that one. If I go back, look at that. I got right on there. Boom. There's rejection in price. Right? Right there again, look, right here. Pretty close right there. Right there, came back up, boom. See that bottom one? I'd have to go back far enough. Oh. Pretty close right there. Yep, look at that. Rejected it at least initially, and then at the bottom as well, boom, and then so it kind of played a really soft level of support resistance. The point is that anything, right, any line can be used as support resistance at some point historically. It doesn't mean that it's relevant to what you're doing right now, right? What makes it relevant is some other form of validation. If there's something else in there that is telling you, yeah, the market is going to resist at this level or support at this level, right? Then that gives you more credence to, you know, whether or not you have a valid line. Holy cow, I didn't realize that other chart was linked, so now I got to get back to my examples. Here we go. Okay. All right, I think that was the last one I had. Nope, one there. Yeah, that was the last one. Okay. My starting point was right here. Okay. Now check this out. I've got a level that's just flat right here at this line is just flat. The thick orange line is just flat. It's not a specific value. 2.72684. If I go back, it's 2.72684. So the exact value here is on the thick orange is the same value here, and that makes the line flat. Okay, it's not a flat top because it's not a 0 or 10 or negative 100, and it's not a half top because it's not negative 50 or negative 5, right? It's just flat. It's just flat. Okay. Now looking at let's look at this line right here. Check this out. I'm going to make this line black. Look at this line right here, okay? I can go back and find significant levels, right, of resistance and even support at that level right there where that black line is, okay? So let me go back further here. Look at this. Right there, it came down right there and then poked through and then shot back up. Right here, boom, shot back up. That's a significant level, right? That's a significant level of support, okay? I didn't just pick it. The indicators told me it was there, all right? And if I go back far enough, I can see that it actually works as resistance or support, resistance as well, okay? So here we are. Let's get to it. Where's my line? Holy cow, how far back did I go? Just keep going until I find my line. There it is. Okay. Okay. So that's telling me there is some significant level of resistance right there. Now, by the way, if I go back to this candle where we can see we have a line as well, right? This line right here. I don't have any flat or anything, right? So that's not telling me that there's a significant barrier in front of me, which means if I have any kind of buy indication, then I can likely continue to buy, right? Okay. But right here, now I'm gassing out. I have this flat line regardless of the value. The only reason we would look at the value in this particular instance is because we want to make sure that the value that this is when it's flat is the same as the value when it was pointed down. And that's how we know this is truly flat. Okay? Hopefully you guys are sticking with me here. Let me know if you have questions. It's so quiet. Okay. So we've got this flat. The value is equal. And we can look back and see, yes, there's just some significant values of resistance there, right? Let me change, I'll just leave it blue. Okay. So right there, we're looking for opposite direction movement. Boom, starts moving opposite. There we go, 3.3 pips, not anything too significant, but it starts moving opposite, right? Okay, so let's go to another one so I can show you what I mean here. Okay. Right here. Okay. Okay, right here, again, we've got 83.77612 on the value on the thick orange right here. And it's flat. Go back one candle, and it's the same, 83.77612. So we know that this is flat. Okay? As it came down, we can see that we have a level of support right here, right? So there's a level of support. So if we didn't have that level, let me just erase that, and I see that flat, then it would just be as simple as saying, okay, here's where the current market price is. Is there anything significant about that price? And if we go back, we can start to see, yeah, there is some significance to that level, right? Hold on. So it's this line right here. Make it red. Okay? And we can see there's some significance to that level. Look at this. Boom, it hit that line and shot it all the way back up. Right here. Hit the line, shot it all the way up. Okay, right here. Hit it, up. Right? Again, they break through, right? It's not like it's just going to stay, the price is just going to stay above that level forever. At some point, it's going to break through. And if we go further back, we can see that there, and so when we look for these levels based on the indication, we want to look for something that's significant. We don't want to see like it hit and then just kind of went up a little bit. It's better when we see it hit and then we get a hard rejection, right? Okay. So we can see that there is some validity to that particular line. So right here, we've got, that's not the one. Right here, we've got that level of support validated by the thick orange line. Okay? So are we going to break through right here? Possibly, right? But it is also possible that we'll see some up movement first. Okay. So right here, kind of goes both directions initially, right? Down 2 pips, up 2.6 pips, and then keeps on going, right? It's not always correct, okay? Did it move up a little bit? Yeah, it moved up a little bit. Not anything too significant, right? And that could very well, I mean, whether we got the indication there or not, we could very well see some movement. But I'm just showing you that when that goes flat, you're likely to be able to find something that works as support and resistance. And the question you have to ask yourself is it significant? Again, look, we hit this next level, right? And again, if we didn't have that right there, let's erase that, and we see, okay, this line is flat, right? 93.29485. 93.29485. If I go back one candle, same, 93.29485. So this is flat. Well, why is it flat? What is it that it's running into, right? So if I drew a line to it, and I can see that we've got some significant levels right away, right there, right? Came up, hit it. It did poke through a little bit to that other line, and then rejected price, stayed below it significantly, right? Not just a little blip like this, although sometimes those are useful when we're in sideways markets, but we saw significant rejection, right? And if we go back, we'd be able to see more, right? Okay. So right there, again, it's flat, 93.29485, not 0, not 100 or 10, not 50, just flat. We go back and we trace it, and we find that, yes, there is some level of support or resistance there. And we start moving back up. Right? It doesn't happen every single time, but you see it's very consistent, right? Okay, let's keep going. So right here, we get another flat line. And it's 25.11696. Go back, 25.11696. Right? So I know that's flat. Now, do we have a level right here that's significant? Nope. Where do we have a level? Well, we already know that that's a significant level, right? If we didn't, let's just say that's not there. Mark this time. Draw where our current market price is. Make this line pink. Dash it just so it sticks out. Okay. Expand that. Do we have any valid levels right there? No, not really, right? Look, these kind of go through it, don't really get rejected on it, and then come back. These go through it. The price stays below it, right? And then go back. So this is actually being picked up right there. You know, these candles are likely being picked up at another level, somewhere higher, right? Okay, let's check this out. So it's not at that pink line, but it can be close. So what about here, for example, right, where we can see that the market has come up and then rejected price, right? The market has come up, rejected, 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 right there, right? Right here it came down. Small rejection. Down, up, right? There's some pop through right there. It came down to that level and then popped back up. And then after it did, it sat on that level again until it broke through it, right? So you can see both support and resistance at that level. So it's a significant level. We go further back, we can find even more. But it's significant. It's not just the level where the market kind of busted. It's a level where it's paying attention. And that's common. Why? Because, look, we've got a round number. Listen, day traders are weird about this stuff. You guys shouldn't be. Don't be. It's dumb. Okay? But day traders are weird about these round numbers. 118, that is a they call it a psych level. Why do they call it a psychological level? Because it's a level that trip people up psychologically, right? So it just, those round numbers, when they change, traders are reluctant at those levels. Okay, so not only, and you can see that, like there's proof of it all around here, right? Even though it breaks through them, obviously at some point, right? But it's a psych level. Traders become very cautious at those levels. Okay, so if this pink line is not valid, but we got a flat, right? So stick with me here. The pink line was not valid, but we've got a flat right there. Then we're saying there could potentially be some more up movement before we get that down movement. So let's just find where that level is, right? And it's right about there at 118, And we'll use that, and when it gets there, then we'll consider the short or the sell, right? Okay, let's click forward. Look at that. Nailed it, right? Nailed it. And then now we're considering, well, we would have already considered, right? Would have considered the entry right here, right? Now we're in it as it pulled back there. And even if it comes back up, we're already positioned, right? But our hope, obviously, is that it starts to go south and short. Okay. There we go. Let's look for another flat. Look at it again. Came up, pulled back, right? Okay, so here again. Look, so look over here for a moment. 6.5, 6.2, 6.94. We know that's flat because if we go back, 6.5, 6.2, 6.94. Right? So the value there is the same as the value here, and that's why the line is flat. Okay. Again, do we have any significant levels? Right here. Right where we currently are, right here. A little bit right there. Really small ones, right? As you came down, bounced up, not too far. Down, bounced up, not too far. Now it's down again, right? So we're just kind of testing those levels as we go sideways, right? Is that a level we want to use, or we want to stick with the one we were using before, which is the one down here, right? Because we had already validated that level down there. So let's look at this one. Just going to dash it. Let's go back. Do we see anything significant? Yeah, there's a little bit right there, right? Came down. Almost just missed it there. Came down and then came up. But again, you know, you can see that small movement versus something like this where it just kind of shoots up. And then it broke through it again, broke through it, you know, so on and so forth. It did kind of come up right there with that wick and it rejected. So there's something there, right? If we've already got something established, though, something that is held, you know, at different times historically, we may want to just stick with that, with those lines, right? Otherwise, you know, we could suffer the drawdown and go with something like that, right? But at this point, we're looking to see if we can get any kind of reversal. So that means that we're looking for up movement, significant before we get any kind of significant down movement. And we actually get both, right? That sucker just jets. 11 pips, but if we'd have waited for that level right there, it would have been more like, you know, 8.5 pips of drawdown, because from there it would have gone down 8.5 and then came back, you know, and from there to there is about 10, right? So about equal, right? About, you know, 8 to 10 down and then 10 up. Okay, let's look for another one here. Let's do this. Let's erase these lines. And we're not going to use anything that's negative 100, 0, or 50. So if we see any of those, we're not going to use them. Okay, right here. All right, so right here we've got 23.81154. Again, it's the same, 23.81154. Right here it's flat because the value is the same as it was before. And we've got a green candle, right? So now I know there's a level of resistance somewhere around, right? So now I go hunting for it. Okay. So we can see that if we did this, check this out. Adjust to there, right there, maybe even, no, right there is good. Right there, we could even go as far as something up here, right? So let's just stay right there, because we can see that came up, strong move up, and then threw price back, right? Here, it came down, up, hit it, threw price back, and then broke up. Okay, let's see if we can find anything more significant than that at that level, if there is a better level, right? So right there, we can see that it did pop through, right there. Then after it came back down, it hit, and then jetted price up. See if we can find anything more significant. Okay, I'm gonna lose my spot. volume disappeared. I'm not sure what that means. Okay. So is there anything more significant? Might have to go back a ways. A little bit right here as well, right? Came down, hit it, rejected. Right there as well. Came down, hit it, rejected. A little bit of resistance there. Oh, my volume, my actual volume. Yep. Thank you, Steve. Steve came into my office. He's like, no, your headset volume. All right. Thank you. I appreciate that, Karen. All right. So we can see that there are some levels there, and we can see that there are some significant levels that we potentially run into at that line. So let's go forward. Whoop. Man, how far back did I go? There we go. Okay. All right. So we know there's some significant levels right there, right? Right where we are. And so right there, we're looking for that pullback to the short, to the sell side, because that does have some significance right here as well, right? We see it came down, almost pegged it right on it, and then started to move back up. Right here again, kind of came through it a little bit, but then moved back up. And right there finally broke through, and now we're using it as resistance, where before it was more support. Okay. So we only looked for that line because we had a flat level. All right, so now we're looking for some short movement. Here we go. Moved up about 2.1 and then down about 3.5, and then a little bit more there, so on and so forth. Okay. I think I've got another example. I'm going to erase that line as well. So I didn't use this example, right, because that's negative 100. So we're not going to use that example. That would be almost a flat top, right? Miners didn't make it all the way through, oversold yet. But that would almost be a flat top, right? Okay. All right, so let's look for another flat. Erase those lines. Oh, what was that? No, negative 100, not going to use that one. 0, not going to use that one. 0, not going to use that one. Man, both of those flat tops would have failed, though. That's crazy. It's hard to find back-to-back losers on flat tops. Oh, that brings us current. Okay, let's go somewhere random. Okay. Zero, not going to use that. Okay, here we go. So right here we've got flat. Let's see if it actually is flat, right? 96.16673. So let's go back one candle. 96.16673. So right there is flat, and the value is the same for where it currently is to the previous. So we know it's actually flat. Okay. So let's draw our line right here. I'm going to mark both of these so I don't lose my spot like I've been doing. Okay. Tighten this up a little bit. We can see immediately, that we're on a level, right? Came down right there, rejected price back up, right? Okay. And then if we go back, there's a little bit of space, right? A little bit of space right there we could very well use. Let's measure it, see if it's significant. So right there, right, that looks pretty good. Because look at this. Let me get rid of that line for a moment. And maybe even further, right? Because, no, I erased the wrong line. Adjust, right there. Okay, so check this out. Back here, it came up, hit that, rejected, and then broke through. Came down, hit it, rejected, and then broke through. Broke through there, hit it, rejected, broke through there, hit it, rejected, broke through, right, and then hit it, rejected, broke through a little bit, and then shot up. But then right here, we really start to validate it. Hit, rejection, right? Just a little bit lower than where we currently are on that particular candle, right? And our shadow catches it, but if we're waiting for that line or something close to that line, if it's significant enough, then it's better just to wait. If it's not, then just suffer the drawdown. Yeah, 3 pips, maybe. It depends on what your take profit and stop loss are, right? If you're going for a 3 pip take profit and you want a small stop loss, then you might want to wait for that line. Otherwise, it's like, yeah, let's just go for it, right? So again, it's just going to depend. But we do see that there is a level of support, and that's being validated by the thick orange just being flat, not even flat with a specific value, right? It's much more discretionary, okay? And we do test that line again. Check that out. So it does still test that line right there. So it went about 3.5 pips and then starts coming up, right? So we rejected price. Again, how did we know we were going to reject price right there, right? Because there's other situations where support and resistance gets broken. So that's why we don't rely on support and resistance. We only have that line there because our indicator told us to put it there, right? How do we know when we should respect that level? Because our indicator told us. If our indicator didn't tell us, then we disrespect it and we say short if that's what the indication tells us. This is why we don't use support and resistance, because it causes for traders to be reluctant at certain levels, right? But if you have an indicator that's telling you there's a level there and you can validate where that level is, then that's using something that is useful, something that is more accurate than just you guessing as to where that line should be, to let you know, hey, there's some support here that you want to be cognizant of, and in addition to that, you've got some indication that tells you that you could be going the opposite direction, right? But at worst case scenario, you're not saying, well, I've got both of these pointed down and I've got pressure pointed down, I'm going to look to sell, right? Because now you can see that there's a level there that could very well disrupt that. Okay, so it's just giving you another level of security, right? Another level of assurance, some more discretionary, some discretionary eyes on the situation, so that you can determine, okay, is this going to be good, or should I wait? Should I position? Or should, whatever the case may be. Now, again, it's not just a matter of taking my advice or not, and I'm not giving you advice, but not taking this lesson and trying to just immediately implement it. Rather, go back on your trades to see when my trades occurred that maybe didn't work out or didn't work out as well, or whatever it may be. Was there something with this thick orange that could very well have given me a clue in as to whether or not I should execute, or if I should wait or position or whatever, right? And if it's there, then you can, because now you know that it's going to be relevant, then you can start using that level of discretion in your trading and increase your win percentage and keeping your risk to reward the same, thus increasing your profitability, right? Okay, so right there we would have been looking for a long movement. And we just pulled that one out random, guys. So you can do the same thing. You can just go pull one out random, okay? And find those scenarios, especially in the trades that you've taken or your back testing data, and see if there's any credence, if there's any validity to that. Just going flat, right? I realize we were talking about half top, right? And that's great for a pattern systematic way of looking at it. Flat top, half top, that's great for a systematic way of looking at it. This is much more discretionary. And again, that's where I'm trying to get you guys to, is a much more discretionary way of looking at the indicators. With the exception of my volume going down, you guys have said nothing, so my assumption is you guys have kept up with this just fine, which is great. Of course, if you have questions, feel free to email me. But that's going to wrap it up for us today, guys. So I definitely want you guys to play around with this. You can see there's a lot of value in that. Something very, very simple and easy to identify and validate at just a glance, and just takes seconds to verify, whether or not that line is truly flat just by going back one candle, right, and making sure that the value there is the same as the value here, and that's what makes it actually flat. And then after that, play around with the levels of support and resistance. See if you can find them based on the thick orange line. Believe me, you don't want to just draw in support and resistance, because like we said earlier on in this session, any line can be that. I can put that there, I can put that there, and I can go back and find where the market has bounced on those levels. Does that mean that those are going to be useful to me? No, absolutely not. Which means I can do this, right? And every single one of those lines, I can find a level of support and resistance. How is that going to help me? If at every inch there could be a line that I could validate if I go back far enough. How is that useful? It's not. But if I have an indication telling me, hey, there's a valid line, then I can go and find one and forget the rest. That's the power of the indicators, right? So I want to challenge you guys in that direction. I just don't want you guys to get carried away with support and resistance and start saying, Hiram's teaching support and resistance. I used to. Matter of fact, you can probably find videos on the Mastermind where I taught support and resistance. And for a little while, I did use them. But I realized that I could see support and resistance in the indicators and just stopped using them. Right? But I still taught them for some time because people were just attached to them. I don't want to reattach you guys to something so just fickle and frivolous, right? It's useless. But if you have an indication, something that is consistent and predictable, then you can look for that level, right? And see, okay, is that far enough away that I want to wait for the market to get there, or is it not even significant where I can just take the trade now, being that it technically already touched that level, right? So just some food for thought there. Thanks for joining us today, guys. We'll look forward to talking with you guys next week. Of course, if you guys have questions, feel free to email info@daytradesmart.com or reach out to us on any of our social media or the Mastermind website. Thank you guys for joining us, and happy trading. See ya.